by Geoffrey Yu. He's head of UBS's UK Investment Office. He's with me here in the studio. So, Jeff, what do you make of all this? What are investors making of all this?
Well, investors are looking at commodity prices in general, and they are factoring that into their investment decisions. But at this point, when it comes to oil per se, we've been reassured by the Energy Ministry that Saudi Arabia remains committed to its export levels. They're looking at 7.2 million barrels a day in November. As long as that supply and demand dynamic is within markets' expectations, let's take a step back and let fundamentals drive oil prices.
The timing of this, though, is absolutely fascinating because only a fortnight ago, Crown Prince Salman was inviting the great and the good from all around the world, leaders, governmental heads, lots of investors to Saudi Arabia, talking about his strategic plans for the kingdom. What does this tell us about the investment climate within Saudi Arabia itself?
Well, I think in emerging markets in general right now, and if you look at the Middle East, if you look at the Far East, a lot of investments are interested in that region, and a lot of state entities, globally, they're using their financial power. If we look at, how much in terms of foreign exchange reserves that they have, China, Saudi Arabia, United Arab Emirates, in the trillions. So they want to deploy that money right now rather than just make 2.5% on US treasuries. I've seen a lot of opportunities out there.
A lot of the princes that have been detained within Saudi Arabia, of course, some of the world's biggest investors themselves, notably Prince Al Walid. Do we have any idea about what's going to happen to their assets now that they've all been imprisoned?
Well, right now, we're not going to speculate on the political side of things, but it's important to take into context, how you invest. Geopolitical risk, no matter where you're investing, in developed markets, nonetheless, that's always going to factor, into your decisions. But it's important to stay invested, be diversified, and look past, some of the short-term developments that could happen. So this doesn't change our fundamental view.
It wasn't particularly immediately obvious yesterday why this crackdown should lead to that spike in oil prices. I mean, is it the fact that this just shows potentially there's a ratcheting up of unease in the Middle East generally?
I think it actually goes back to how oil markets behave in general. Saudi Arabia, over 10% of global, production, right now. They are the swing producer. So, any marginal information, will affect oil prices. It's just, when you are the marginal producer, that's how markets work. But again, fundamentally right now, we don't see any reason to change our outlook. And I think markets are reacting accordingly right now.
So do you have a price target in mind for where oil goes?
Well, we are looking at a $60 to $65 dollar range. And mind this was not the consensus view. Let's just say even a few quarters or so. Oil price has been rising for a while now, as you've just mentioned. What the RAC highlighted, and if that leads to inflationary pressures here or globally, well, that's something for the Bank of England to think about.
Quite so. And what about emerging markets in the Middle East more generally at the moment? I mean, clearly there's growing tension between Iran. We had Lebanon's PM stand down at the weekend. He's blamed Iranian interference, but some people say that was actually down to the Saudis pulling on his chain as well. I mean, the whole area does feel as if it's becoming rather less attractive in some ways.
Again, going back to the point about how do you price in geopolitical risk, Donald Trump is heading to, Beijing, North Korea is a big focus, as well. So if you are diversified from an investment point of view, then should be able to help you manage, past these risks. But, mind you, if the Middle East has sort of been an untapped market in terms of sovereign bonds, for example, if there is going to be long-term liberalisation, which has been the trend, as we've seen over the last few quarters or so, and last few years, then that actually is going to be a stronger investment destination over the medium to longer term. So we remain optimistic on emerging markets in general.
And as you say, you're thinking now about your outlook for the year as a whole, as we go ahead. I mean, the question that everyone's asking, I mean, last night we had the Dow, the Nasdaq, the S&P, all at a new record high, 52nd high for the US market this year. The FTSE's a record high. Are markets getting overstretched here?
That is the first question that clients ask us, when we meet them. It's been a good run. How long, should I stay invested? When should I get out? And my answer is often, well, when did you first start to worry about valuations, right? It seems like it's been a while. But if we look at our new forecast, we actually see US to be, relatively stable next year and even expand a bit, maybe 10 basis points higher, 2.3% 2019. So we still want to be invested in equity markets, but as always, look out for the risks.
All right, Geoffrey Yu from UBS Wealth Management. Appreciate you joining me.